Good morning, everybody. Hope everyone's doing wonderfully well. Welcome to the game plan. My name Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we're going to cover its Fed Day, right? So we have the big FOMC decision later today. I'm going to cover the technicals of the chart. What are we looking at? What are the probabilities? What are the big movers? What are the big technical levels? We'll look at gold. We'll look at Bitcoin, silver, as well as key stocks in motion. All right. So first and foremost, what I want to do is say, okay, we have the Federal Reserve here that they will be coming out at 2 p.m. with their decision. The decision is not really a decision at this point. It's going to be a 25 basis point rate cut. But the kicker is this, right? It's all about what they guide for 2025. What do they say on inflation? What do they say about the markets going forward and expectations for the economy? All right. So let's get into some charts here as we get started. If we look at the S&P here, one of the things that I'm kind of keeping an eye on the S&P is that the S&P has just been chopping sideways, and this potentially puts in a little bit of a short-term bullish pattern, right? So again, if we look at this as an up move, this is kind of your flag pattern right here. Here's your flagpole and then the sideways consolidation. It does open the door potentially for one more push up towards this trend line. We can see every time we've hit this trend line from the underbelly, it has been rejected. And you can see right here was the starting point. It was above, hit, bounced multiple times, went away, hit again, bounced away, and then chopped and broke. And I've shown this a lot, but I think it's so important to kind of take note of here is that this is resistance here now, resistance here, 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 and here each time we've had a pullback. Now, this latest move up, we didn't get to the trend line. To me, that shows a little bit of weakness. It shows a change in character in the market, and character meaning that every time it was hitting this line, right? So all of a sudden it didn't. But I still think there's a small possibility of us getting to that line. It's only about a 2% move up. But the kicker here is this, right, is to understand that you have a scenario building where tech starts to pull back, right? If we look at the NASDAQ 100 has hit a major trend line. It's been stronger than the market, right? So while the S&P hasn't been making new all-time highs, the NASDAQ has, right? Really just up, 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 up. Small pullbacks along the way. But we finally achieved that level on Monday, pulled back on Tuesday. Today, tech is basically neutral to positive, but we'll see again where it goes on the Fed decision. But the idea being is that for me at least, I could see a scenario here where we actually see a pullback in tech, some profit taking on tech like this, while the S&P actually makes a little bit of a move to the upside. Okay. Now the kicker here is that the S&P is kind of your neutral ground. And what do I mean by neutral ground? Well, if you look at the Dow, while the Nasdaq has been soaring, the Dow has now been down 9 straight days in a row. All right, that has not happened in a really, really long time. And to be precise on that, since 1978. Think about that. Jimmy Carter was president in 1978. So again, many of you guys watching this probably were not born in 1978. Heck, I wasn't born in 1978. So the idea is you've had weakness in the Dow, which by the way is mostly defensive names, 3M and so on and so forth, while the tech sector has gotten money flow from the Dow. Now, the kicker here is I think the Dow is the no-brainer bouncer here that goes up like this, right? So I don't think the Dow makes a new all-time high. I think the high is in on the Dow. But my kind of gaming out the charts is that we move up like this, and then what does this look like it could start to form, folks? So shoulder, head, and shoulder. And so the idea is the Dow gets the biggest bounce because it's been down 9 straight days. That hasn't happened since 1978. It's due for a bounce, in other words, right? So then you get the bounce on the Dow, which is more defensive names. Money rotates out of tech, and then eventually it comes in. While the Dow is bouncing, the S&P gets that little bounce up, maybe up to here, maybe not, somewhere in this vicinity, and then the S&P rolls over as well, eventually breaking technical support here and taking us into the new year. Now, again, just something to keep in mind is one of the reasons why. So we had the cycle date that just passed this last weekend, right? So the cycle date tells you a change in character is starting to come. But also, what did I say about that? I said, listen, ahead of the holidays, don't expect a big rollover. Like, if anything, markets could be in float mode. Well, the S&P's been floating and maybe even a small push up as money rotates out of the NASDAQ, which to me looks like it may have topped out. Obviously, we'll have to see over the next couple days. But again, that money rotation out of tech, maybe out of Tesla, out of some of these high flyers, could be headed towards the Dow and then by default some of the plays in the S&P. And always remember, right? So you have the Nasdaq is the tech sector on one side, right? So here's your Nasdaq. That's the one that's the most aggressive. That's kind of the biggest risk on. Then you have the Dow on this side, which is defensive, right? So again, defensive on this side. And then in the middle, you have the S&P, which is like a little bit of both. And that's why in many scenarios you can see, okay, when the Nasdaq does really well, the Dow does poorly because money rotation right now is what's going on. People aren't, by the way, people are not pulling money out of the market. They are putting it in, although I'll bring up a stat that I just saw just recently. But again, the S&P is kind of right in between. It has some tech in it, but it also has some of the Dow kind of old school stocks in it. It's 500 stocks. It's honestly the best gauge of our markets versus the NASDAQ 100, which is just 100 companies on this side. And then you have the Dow, which is just 30 companies on the other side. Okay, now back to that stat that I was just telling you guys about. So check this out. So we've all heard the narrative that there's so much money on the sidelines and it's going to come into the market. Well, the latest stat from Bank of America is actually that money has already gone into the market and money on the sidelines is now at its lowest point ever. Ever, folks. Now, listen, that still means there's trillions on the sidelines, don't get me wrong, but percentage wise, it is the lowest ever. What that tells us historically, and remember, verified investing is a data driven company, is that essentially what that tells us is that historically, when we've had these low levels of money on the sidelines, it has marked major market tops. Now, here we are at a new all time low of money on the sidelines, percentage wise. So, again, that's even more scary in terms of what could come in 2025. But again, I just wanted to throw that out there because the narrative has really been, oh, there's so much money on the sidelines, right? This is what the institutions are telling all of us, like, and even the mainstream media. Oh, there's so much money on the sidelines. There's so much money that can rotate in as interest rates come down. In reality, percentage wise, it's not that much anymore. In fact, it's an all time low. All right, back to the charts we go here, folks, as we get back into it. And again, I am on a cruise, so forgive the poor camera quality, etc. I don't have my fancy setup from the office. Okay, so we went over the main indices here. Now, NVIDIA has this head and shoulders that broke down. But NVIDIA short term has been selling while Broadcom has been going up, which is another chip stock that had those great earnings. And we've also seen NVIDIA selling while Apple's been going up. Now you're looking at a reversion trade. So in general, what I'm expecting is NVIDIA should get a bounce, and it is a little higher today. Look for a move back to, let's say, 137, the neckline of the head and shoulders. That's a retrace to the scene of the crime, and then your next leg down. Now, on the other side, you have things like Broadcom, which finally started to pull back yesterday, and Tesla, which again is down a little bit today. But look at this parallel on Tesla. We kissed the high end of this parallel. Again, for me, I'm expecting Tesla to see a reversion trade as well, profit taking come in, bringing it back towards this area right in here. All right, so again, you can see the parallel connecting lows to lows, highs, and kissing the high. I would have preferred, honestly, for it to hit. Maybe it still will. Yesterday's high, I think, was around 480, what was it, 484, 483, and this trend line is right around 490. So there's always a small chance it pops up a little bit, but it is negative on the day. If we go to our intraday chart, you can see Tesla yesterday closed right up in this range here. And it flushed kind of early in the overnight here, and then it's kind of bounced back a little bit, but it's still net negative on the day. All right, a couple other keys here, guys, is that Apple is one of my favorite shorts at this current level, and I'll show you why. So if we flip over to the daily chart, look at this trend line on Apple. So as a shorter term mover, I would expect Apple to pull back in this day, right? And Apple's had, by the way, a huge move up from 220 on November 5th, essentially, all the way here to 253 to 254. Percentage wise, for a almost $4 trillion company, that's a massive, massive move in the stock. But look at the trend line right there to there. So you should see, again, a pullback like this. My expectation is a pullback to about the 237 area. The reason I'm choosing that level is, look, if you draw a trend line and it's a flat horizontal trend line, pivot high, that would be a perfect retrace. Then the stock has to decide, is it going to go back up or is it going to break and start to trade back down? Obviously, time will tell. I'll analyze it in real time with you guys if we come down to that level. All right, quickly going over a couple others after the bell today. So we have the big Fed announcement at 2:30, the press conference. Then after the bell, we have Micron reporting earnings. So I'm not someone who buys stocks going into earnings or shorts them going into earnings, but I will say that the chart pattern on Micron is not a bad chart pattern. Right? It doesn't, by the way, the reason why I don't play earnings in terms of buying or shorting a stock is because if you're wrong, you usually get crushed. Because so again, you could have a favorable outlook, and this is what I'm drawing here is kind of a cup and handle or a bull flag, right? So it does favor the upside, in my opinion. But the problem is if it doesn't have good earnings, then the stock probably drops like all the way down to $95 from the current 108, which is a huge drop, right? So that's why it's so risky to play these type of things going into these key events. But yeah, certainly it doesn't look like a bad chart pattern going into earnings there. Again, they will report after the bell, and that could shape the future here on the chip stocks going into the end of the week and into the Christmas and New Year's weeks. All right, now we do continue to see some interest in these cloud supercomputer type stocks. Most of these, like Rigetti, have just run insanely. If anything, you start to scope them out for major technical resistance. I'm not going to play around with that for now, folks. Maybe in another game plan in the next couple days, we'll get into those names. All right, now Bitcoin. Let's look at Bitcoin here, folks, because Bitcoin is pulling back just a little bit here. And if we look at Bitcoin, it's trading right at 105. So again, back down from 108. It was down to about 103 and it's floated back up. But remember, on the Fed, this is going to be a game changer, right? So you're either going to rally back up and get back up to this area here on the Fed, or it's going to flush and start to retest this 98 to 99,000. But so far, the 107, 108 level has been a good resistance. The question is, do we break, right? And when I say break, do we break here? Or do we break out over here? So it's either a breakout with confirmation. It would have to get probably north of 110 for me to really believe it. Versus, and same thing here. We break below 98 and confirm. Then there's trouble brewing for Bitcoin. All right, next up, let's take a look at gold. And gold, again, not much going on in the metals, to be fair. You can see flattish to negative, and that's to be expected, right? So we obviously understand that the Fed decision and the commentary will affect the U.S. dollar and rates and expectations and fear and greed and all these things, and those all play into what gold will do. So after the announcement, I actually expect a big move, but before the announcement, it's going to stay like this most likely. The only thing I'd like to point out here, folks, is I love parallels, and you guys know them, and you can see how here, so this parallel from here to this low, and then from this high to this high to this high, it's perfectly parallel. In fact, I use the parallel tool here. One of the things to note here, look at this, guys. You have a little secondary parallel right here. So look how this low, this low, this low, and then you did get below here, but then look, kissed it, pierced it, touching it right in this range right here, and then again, so it just shows you that there's parallels within parallels, and believe it or not, a lot of times they're in a Fibonacci sequence. So there's a little educational stuff there. I don't really go into that a lot, but you do have one of those tools over here, which you can actually do a parallel with a fib using fibs within a parallel, and there is something to be said for it. I mean, it's amazing how that stuff does play out. The Fibonacci sequence does play out in nature. The rings on a tree, the flower, the petals on a flower, all these type of things. There's a reason why it works in the markets. It's subconsciously, whatever it is, within us, within nature, etc. All right, silver down ticking a little. This is a big level on silver. Again, at some point, this pattern favors a breakdown. Don't know if we'll get a bounce first, a little bit of a bounce, then the breakdown. But probability-wise, silver is still in a bearish consolidation pattern. And then if we flip over to oil, this is a great example of the methodology that I teach, guys. So here you have a short-term trend line, high pivot to high pivot to high pivot. It breaks out, doesn't confirm, confirms. And then look at how yesterday it flushed below. But once you confirm above the line, this becomes major, and it's very rare that it's able to get back below so easily. By the end of the day, it's up, and then today, or up off above that line, I should say, still down on the day, but then today moving right back up. And again, probability-wise, which is never 100%, but we know it favors it, you would expect a move up on oil here. Okay, and by the way, that's a shorter term move versus my long term bias on oil is still very, very negative. Lastly, let's just take a quick look at natural gas here, folks. Nat gas is pausing today. It still is holding this major technical line here. So again, you have this support and this resistance. If this breaks, eventually I think you go here. And then if you get up here, I'm not gutsy enough to short there, but you could break, if you break out above that line right here, there's a gap fill going back to 2023. Looks like January of 2023 at around 430. What is that? Around 4, we'll call it 440 on natural gas. So yeah, some really, really interesting stuff going on here ahead of the Fed to keep an eye on. And my goal with you guys is just to give you the lowdown, dirty technical analysis, right? And that's the idea behind the game plan, behind verified investing. Get rid of the hype and just talk charts and probabilities and data. And I think ultimately people can understand that. And what's nice about it is it's data and charts don't lie, right? You have narratives being spun by so many different areas, social media, mainstream media, pumping, dumping, all this nonsense, right? But when we look at the charts, we really get a clear picture of not what is guaranteed, because there's no such thing in trading. I certainly have my fair share of losers and bad calls. But if you take all of my calls together based on the charts, I win a lot more and I make a lot better calls than my off calls. And that is the kicker. And that's what I hope to bring to this world that we live in at this point, which is a world that's driven by so much nonsense on social media, so much nonsense in the mainstream media, so many different crazy things. We all need a little bit of sanity in our lives, which again, technicals can bring that to our financial future. So, on that note, I'm going to bid you farewell. Thank you so much for tuning into the game plan. Watch the Fed later today. I'll be tomorrow analyzing that. My guys in the office will be on trading the close. They'll be rocking it. They're rocking it all week on trading the close. They'll be covering the Fed decision and the key moves there as well. Thank you so much for tuning in. Thank you so much for your support here at verifiedinvesting.com. You guys have a good one. Take care.